Well, welcome back. Time for the word on Wall Street. Top investors watching your money. Joining me right now is Bulltech Capital Chief Market Strategist Kathryn Rooney Vera. Great to see you guys this morning. Thank you so much for being here. Right smack dab in the middle of third quarter earnings season, in full swing right now. Last week we saw mixed performances because of big tech. Kathryn, what's your take on this, the last trading day of October? After a big October, the markets are up across the board. We're looking at a decline this morning, but the Dow Industrial's up 14% for the month.
Yeah, it's an impressive bear market rally. I agree with Mike. There's also the fact that the Fed is likely to top out its rate hikes this week with 75 basis points, likely to drop that to 50 basis points in December and get us to the terminal rate by March of next year. The market likes this. The market is thinking that at some point we get a recession and the Fed moves from hiking to loosening. So the market is happy about that, and hopefully it's not another head fake as we saw earlier in the year. I do think inflation has peaked. What we haven't seen yet is the downturn in earnings. I agree there with Mike as well. Next year's earnings expectations of 6-8% positive, I think, are very positive, too optimistic in my view. And if in fact we do get a recession, which I think is inevitable for in any economic cycle, but very likely in 2023, then earnings will take a hit, and I think we could even see a recession in earnings. That's a logical consequence to economic contraction. So I think that the markets are, as I said, in a bear market rally. I would be taking this opportunity to adjust portfolios. One of my top picks this year has been defensives. Defensives have certainly outperformed cyclicals, and I think there's still upside there. So we're talking energy, energy, utilities, staples, and healthcare. Those are the winning sectors, at least outperforming this year, and I think they'll do well going into next.
So just to be clear, Kathryn, you do think that at some point the Fed has a pivot? Do you think that happens at the end of the year? You said you're expecting 75 basis points tomorrow and Wednesday in this next Fed meeting, the November meeting. December, what happens then? And into next year, as we are looking at the impact of all of these rate hikes, you're talking about a much slower economy. Do you think the Fed keeps this up?
The market is expecting a pivot. I'm not. I think the Fed's going to use verbiage such as higher for longer, not leading the market to think that there's going to be a reversal in its policy move. So I do think the Fed is topped out in terms of the magnitude of its hikes, and they've indicated that in the dots plot. The market is getting euphoric about something the Fed has already indicated in its dots plot, which really makes no sense to me. So I think they do 75, 50, and then they get to 5% by March. They could do more. If you look at the Taylor rule, Maria, it's fascinating. It's above 7.75%. The Taylor rule says for the Fed funds rate. And I think that the NAIRU, which is the natural rate of unemployment, at which the unemployment rate no longer is inflationary, has moved higher. So we're talking unemployment that has to get to about 4.9%, from 3.5% to 4.9%, to no longer be inflationary. So that's a lot of jobs that are going to be lost. We also get Friday labor market data. The market's expecting 200,000. That's also optimistic.
I say. Kathryn Rooney Vera, always great to see you both. Thank you so much. Have a great Monday.